maybe we should relook into this. Maybe we should open this opportunity up to our investors, because we thought that, you know what, we actually like the deal. Why don't we jump in? We invest in every deal ourselves. So after relooking at it over and over again, we thought, you know what, we will invest in this deal. We will offer such opportunity to our investors and let them decide. Okay. Yes, there's a lot of unknown. There's a lot of risks and factors involved. We don't know what's going on. But at the same time, at that time, market was really plummeting, if you remember.
Yes.
The stock market dropped about 30%. A lot of people started to get very nervous. Some people were actually sitting on cash, earning almost nothing. That particular deal, cash flows from day one, it was paying anywhere from 5 to 9% distributions paid out monthly. And we just opened that opportunity up. We hosted a webinar.
Welcome to Real Estate Deal Closers with Anette, Talie, where we focus on the deals. Our guests are real estate closers who will share in detail the whole process from finding a deal to closing it, as well as strategies and tips to help you do the same. Here's your host, Anette, Talie.
Welcome to another episode of Real Estate Deal Closers. I am your host, Anette, Talie, and my guest today is Alex Kholodenko. Welcome, Alex.
Thank you, Anna. Thank you for having me.
I am super excited to have you because we were talking right before we started the show how we are raising capital right now in times of COVID, and we were talking about how we were doing it. So super exciting to have you on the show. Let me tell you a little bit about Alex. He has over 10 years of strong experience in real estate investing with single-family homes, tax deeds, liens, money lending, and fix and flips. He has spent 20 years in high-tech software industry in Bay Area working as an IT professional. Alex has co-founded Wealthy Mind Investments for his lifelong passion for helping people. Now his focus is on commercial real estate investments because of the simplicity of being passive investor, scalability, and tax efficiencies. He has created strategic partners with experienced multifamily operators that have boots on the ground. The success of this partnership have resulted in increased cash flow and appreciation for all investors. He believes that busy professionals and investors deserve access to proven wealth strategies in commercial real estate investing so they can enjoy life to the fullest potential. Alex is originally from Ukraine, has lived in Silicon Valley for the last 25 years, and currently resides in Belmont with his wife and 2 sons. Impressive. 10 years of experience. Thank you for being here. So tell me, how did you get into real estate?
So that's a good question. So I always had an entrepreneurial spirit in me, even though I've had a corporate career for the last 20 years. And real estate is a very proven wealth building vehicle, right? This is not a rocket science. You see that there's a lot of, especially wealthy and uber wealthy people have been continuously investing in real estate. And I took a hard look at myself and others. Everybody seemed to be either doing real estate sales, being an agent on the weekends. I didn't really like that model. And I said, well, what if I become an investor? So over time, I started with single family homes like everybody else. And then eventually ended up with syndication and commercial, specifically larger projects such as commercial real estate. We typically do invest in 100+ units. We've done hotels, storage units. I've also invested in distribution centers and other type of assets.
Wow, impressive. So at what point, how many homes did you own when you decided, I think I need to do something bigger? How many?
Yeah, so I actually did. So I actually did not have a large single family portfolio. I did a couple of fix and flips. I did buy one rental property, then I bought another rental property in Florida near Kissimmee, where Disneyland resorts are. So I started with Airbnb. It didn't work out. Then I switched them to traditional leases. And then I realized, I don't want to manage 20 properties because the plan was for me to buy 10 in my name and then 10 under my wife's name and then just retire happily thereafter, eventually pay them off. And I've had such a difficult time managing these properties, and I didn't do them myself. I did hire a property manager. Then I realized, you know what, there's got to be something out there more lucrative than just single family homes. And that's where I ended up stumbling actually on the internet on syndication, on a group investing model for passive investors. Luckily for me, I was a accredited investor. I had a good net worth, and I started investing as a passive investor myself to kind of try it out, just to prove, does this model works, or is just smoke on the internet? Because I did a lot of research, obviously, before.
Absolutely. I think that's a great way to prove the system, like you said, and to learn as well. Because you're going to be, if you participate in a syndication, you're going to go through the process with very limited risk, because it's not your responsibility, but you're going to be participating and seeing the entire process as an passive investor, and then you can decide if that's for you, right?
Correct.
And you bring a very important point of that you try different things and then you pick what works for you, because some people love Airbnb and they love dealing with people. I have one of the units that I manage, and the owner wanted to change it into an Airbnb, and I was like, no. And luckily, I was able to rent it for a very good price for a year lease, and so I didn't have to deal with Airbnb, which I think is just a lot more work, and I didn't want that. I think Airbnb could be really good if you want to be very involved in it, but I don't want to. I want to...
No, totally.
Yeah.
Totally. I mean, it's all about figuring out what works for you. I do have quite a bit of friends in real estate world. They utilize different strategy. The important thing is, to figure out, again, what works for you. I'm a busy guy. I still have a tech job, day job. It's a demanding job. I cannot devote too much time for that real estate business endeavor. So I really like the passive component as well. And it's a perfect vehicle for somebody who'd like to be in real estate, but cannot devote too much time and effort that is involved. Because typically, as you know, most people underestimate the amount of time that it requires to do real estate investing. I mean, it takes time to research the property. Sometimes you have to tour them, arrange financing, negotiate, dealing with tenants, dealing with property management. There's only so many hours in a day, right?
Totally agree.
The Deal.
All right, so let's talk about the deal. Tell me, where is this asset located and what type of asset is it?
Yeah, so I'll tell you a little bit more about the deal that we pulled together beginning of the year. The asset is in close to Charlotte, North Carolina. We really like this market. We have worked with an operator on several deals in that particular market. It's a high growing market in terms of jobs, income, population, and that deal was the sponsor approached us beginning of the COVID-19, where it was just starting out. And it was a large acquisition of 200 plus units. It was Class A in a good neighborhood near the lake, 20 minutes away from Charlotte, in a submarket of Charlotte. And in fact, the first time that this sponsor, that we've known each other for some time, we met several times at different conferences, so we had lunch. And we got to know each other. We got to know each other's vision. So we were totally aligned. And I built the relationship in such a way that I said, whenever we have a deal that you'd like to participate with us, please keep us in mind and offer such an opportunity, because we are a Silicon Valley-based company. We have a lot of affluent accredited investors that like to passively invest with us. And when the pandemic was just starting out, and he did reach out to us, and it was a large raise of about $20 million, we turned it down. Because we personally, my business partner and I said, this is probably not the right time to buy real estate because there were so many unknown risk and factors. I mean, some people thought that this is the end of the world. This is the global pandemic. Who knows? Are we going to recover or not? Right? But we kept in touch. It was delayed in closing for about a month or several months and a half or so. So about 1 or 2 weeks later, we kept in touch with the sponsor team, and we looked at the financials, we looked at the rent rolls, we looked at current occupancy, and we really liked the deal. If it was not for pandemic, we would definitely jump in with the first call. And then we re-looked at it again, basically. We looked at the financials one more time, and we really liked break-even occupancy. It was fairly low, in the 50s. The current occupancy was 95, I believe. And the break-even was so low, plus the financials, the team was able to get a super low, under 3% interest-only loan, 10-year fixed, amortized over 30, with the 7-year IO option. So we started talking to ourselves. It's like, you know what? Maybe we should relook into this. Maybe we should open this opportunity up to our investors, because we thought that, you know what, we actually like the deal. Why don't we jump in? We invest in every deal ourselves. So after relooking at it over and over again, we thought, you know what, we will invest in this deal. We will offer such opportunity to our investors and let them decide. Okay. Yes, there's a lot of unknown. Yes, there's a lot of risks and factors involved. We don't know what's going on. But at the same time, at that time, market was really plummeting, if you remember.
Yes.
The stock market dropped about 30%. A lot of people started to get very nervous. Some people were actually sitting on cash, earning almost nothing. That particular deal, cash flows from day one, it was paying anywhere from 5 to 9% distributions paid out monthly. And we just opened that opportunity up. We hosted a webinar with our sponsor team to a selective group of our investors that expressed an interest. And we closed it in 2 weeks. We were allocated a certain dollar amount that we agreed to work with the sponsor. And it was way beyond even our expectations. I guess we didn't let the fear of ourselves and in a deal to stop us. So that was a learning curve, and we never looked back. And as I told you earlier, before we started this call, we just closed on 3 different deals, the raises on 3 different deals. It gave us so much momentum going forward that we felt so good about ourselves that it just carries it on.
Yeah, I think you bring something very important that, if the numbers work, it doesn't really matter when you buy the deal. I mean, you always,
Correct.
Obviously, in a pandemic, you're going to have your underwriting has to be a little bit more conservative and plan for a little bit of the unknowns. But if you were saying, like, the occupancy, you only needed to have 50% occupancy for this deal to work, and you were at 95% occupancy. So
Exactly.
you had a lot of room there to work with. And
Correct.
something very important, it was cash flowing from day one. And that's very important because you're gonna put your money to work, and it's gonna be paying you from day one. There's some other deals where it doesn't pay from day one, so you want to make sure that these deals. All right, so let's dissect it a little bit, because we threw a lot of stuff out there, and I know some of my listeners are new to syndication and new to larger deals. So let's go back, and how did you find this deal? I know you partnered with somebody in North Carolina.
Correct. Yeah, correct. So we didn't find a deal. We rely on partners in different markets. We do deals nationwide. We've invested in Carolinas, now North Carolina, South Carolina. We've done a lot of deals in Texas. We've done deals in Phoenix, in Arizona. We love that market too. Florida as well. We've done deals there as well. So as I was describing earlier, we just got to know the sponsor team, and they reached out to us and presenting us such an opportunity to partner with them on a certain allocation that we felt strong, that we like the market. We really like the Carolina market. This is not the first time, and our visions and financials align. So at first we were just scared, right? The deal made sense, but there was so much unknown that we decided to turn it down. But then after we re-looked at We looked at financials one more time. We looked at break-even occupancies. We said, you know what?
It makes sense.
Let's do it. That makes sense. I mean, sometimes it's okay to pivot. Sometimes it's okay to say no, and then change your mind and say yes.
All right.
You have to be flexible. In real estate, you have to be flexible, as you know.
I agree. And so was this an off-market deal?
Yes, so it was a market deal. This was a second sale from the seller to the sponsor team. They knew the seller really well. They did negotiate a slight discount because of COVID-19 of about $1.5 million. The appraisal came in even higher than the purchase price. So that was the good thing. We instantly gained a couple of $1 million in equity.
In equity,
on close.
absolutely. That is amazing. All right. So what did the team do differently because of COVID-19? What type of underwriting parameters did you guys change, or what type of measures to take so that the deal, that you got a little bit protected your investors from risk?
Yeah, that's a great question. So as you know, a lot of underwriting models used to bank on raising rent from year one, right? So this particular deal, there was no rent increase in year one, number one. Number two is right now, the guidelines are still pretty tight as far as underwriting the deals and having reserves. So in this particular asset, we have 12 months reserves. That was part of the requirement from the bank, from Fannie, and it was an agency loan, as I described earlier. It was a 10-year fixed, amortized over 30 with a 7-year IO. So we did raise and have about $1 million or 12 months. It was $1 million plus, a little bit more in reserve, just in case. Yeah, just in case.
Excellent, excellent. And for those of you that don't know, IO means interest only, right?
Interest only.
Interest only. All right.
Correct.
So how much was the raise of capital?
19 million.
19 million. Amazing. How long did it take you to raise that capital?
So it was about 2 months process. In our case, our allocation was about 2 to 3 weeks, I would say. So remember, we turned it down first.
All right.
So we had a very limited time frame to raise the capital.
Was this a syndication 506B or 506C?
506B.
Okay.
We knew the people that we offered that opportunity. We have been educating our investors and telling them that, we will have a deal coming up, just hang tight. Have some reserves sitting in cash, or you can utilize your retirement funds to do that. And we've been conservatively looking for a while, 3 to 6 months. And when that deal came along, again, we were just nervous. But it's understandable. I mean, you remember really well, 3 to 6 months, there was so much uncertainty because of pandemic. A lot of people were thinking that, is this the end of the world? What's going on? The whole world was turned upside down because of COVID-19. But luckily, for us, we were fortunate enough to be offered such opportunity, and we have good investors. A lot of them are actually close friends of ours, and they put a trust in us to vet out the operator, vet out the deal, vet out the financial, and ultimately they decided to co-invest and jump into the deal with us. Excellent.
And was this a value add opportunity?
Correct. So, in our case, we don't do any new developments. We stay away from hotels at this point. We have invested in hotels in the past. Right now, our pure focus is on very light value add opportunity. We don't invest nor buy, total gut out type of rehab. So in this case, the asset is fairly new, about 5-year-old, and there's going to be some very light value adds. So there's going to be additional satellite internet service to be added. There's going to be some repainting, rebranding, but nothing major in terms of changing the units itself because of good quality. another thing I forgot to mention was, as you know, there's a lot of people that are not paying rent.
Mm-hmm.
Right? So the location is so important nowadays where you're investing. This was a Class A asset type, fairly new building. In addition to that, the quality of the tenants were really good. So the sponsor team did a demographic study. They actually got to know through the rent rolls who is the renter, what kind of jobs do they have. And we also felt pretty confident after finding that information and presenting that to our investors, right? So there was a lot of people in that particular apartment that had paying jobs that they can work from home. They had high incomes, 3 to sometimes 4 times the rent of their monthly income, right? So we felt pretty good that, you know, this was the right move for us and our investors to move forward and invest in this cash flowing asset. We buy assets that cash flow from day one. You know, if the business plan does not have distribution in year one, this will be very difficult for us to pass this deal to our investors. It has to make distributions and cash flow from day one. We invest for capital preservation. That's a kind of our mantra. Number 1, number 2, cash flow, and only 3 is capital equity appreciation.
Excellent. And it's very important, like you said, the tenants, especially right now with all this no rent movement that you're getting, that you don't get into an asset class right now where a lot of people are going to try to get into these movements and stop paying rent.
Correct.
Yeah, absolutely. All right. So I want to know now, what is Alex reading lately? What book do you recommend to my listeners?
Yeah, so I actually use a lot of Audible. I listen through Amazon. So right now I'm listening to a book by Bob Proctor called You Were Born Rich. And it talks about the mindset, because I'm a big believer in a mindset. Even the company name that we came up with, Wealthy Mind Investments, I'm a big believer in Tony Robbins, Bob Proctor, self-development. I read a lot of books, continue work on my mindset and help others along the way. Is that the riches and the mindset starts right here. If you can visualize, if you can picture yourself being successful at whatever you do, it doesn't even have to be real estate. Real estate is just a vehicle to build wealth, right? Mm-hmm. It will happen. You will manifest exactly to what you can picture in your mind.
Productivity hack.
All right. So now I want to ask you about your productivity hack. What have you done in your business that have taken you to the next level?
So in particular, in my business, we have email marketing. I think this is a very important tool to have. So instead of emailing people individually, we use an active campaign to email our investors and just keep them abreast, not only for the deals, but just what's happening to what's going on in the marketplace. I think it's important that you continuously educate and add value to your investors. So we host webinars, educational webinars. We bring different speakers, and we're adding more blog, more content. We provide sort of value add to our investors just to keep them educated and informed, because ultimately they rely on us to do the heavy work and due diligence, right? They don't want to research and spend hours and hours of time figuring out which market they should be investing. So they rely on us to get that valuable insights, and then when we find good opportunities, they're looking up to us to consult with them.
Right. How often do you email your list, your investors?
That's a good question. We typically do it on bi-weekly basis, every 2 weeks.
Excellent. Bi-weekly. All right. And do you do it like in short versions of emails, or do you do long emails?
We typically include a couple of articles. So it could be a blog, it could be external article from a validated source, maybe Wall Street Journal or a Bloomberg or National Real Estate News. Then we also sometimes include a recent YouTube video of a webinar that we hosted. So we recently did one educational webinar, how to utilize retirement funds to invest in real estate. So we keep it to 3-4 pieces of information as well, because we don't email every other day. I know some people do, and we don't want to spam our investors.
Put on the spam folder.
Exactly.
Awesome.
Expert tips.
All right, so now we get to the part of the show where you're going to share 3 expert tips. And today, Alex is going to share 3 expert tips on how to raise capital in times of COVID.
Yeah, so number 1 is you got to start early in your engagement process talking to investors. So the reason why some of our investors jumped in and invested with us was because we've been in touch with them, with some of them for a year, almost a year. So they knew what we were doing. We had conversation. They were able to get the emails from us. So they knew that we were looking. We were fishing for a deal. We just couldn't find it. And even during COVID-19, when we found that needle in a haystack, they jumped on it, right? So number 1 is, do not wait for the deal to start calling people, because a lot of people will resist when you call them, when you ask them to invest with you, right? So that's number 1. Number 2 is automation. I think this is very important. Instead of just you emailing the individual person, pick a CRM system. It could be ActiveCampaign, which we recommend. It could be MailChimp. There's others out there as well. And number 3, I think you need to also have a mentor. I think you need to have somebody that has done this, that have figured this out already, that you can reach out to. And there will be a lot of questions that you will not know the answer. And being able to reach out to the person very quickly on the fly, get a quick answer, and get back to the investor is very important. Having that somebody that you can rely on and have a quicker turnaround, I would say, is also very important.
Absolutely. I love that. Like a mentor or, a person that has done what you are trying to do. I think that's awesome to have in anything that you want to do, have somebody to ask questions and be willing to receive the answers, even if you don't like them.
Correct.
And execute.
Correct. Because your investors, your clients, they're looking for quick turnaround, quick response. If you promise somebody that you're going to get back to them, please do, ideally within 24 hours. And having access to a mentor can definitely expedite the investing process.
Absolutely. All right. This was a wonderful interview. Thank you so much for bringing so much value. So where can people find you in social media if they want to contact you?
Yeah, so I do have a website. I have a YouTube channel as well. WealthyMindInvestments.com is the website. You can Google it. You can go directly to my website, or you can go on YouTube, WealthyMindInvestments.com. You can email to me at alex@wealthymindinvestments.com, or you can go to my website and book a 15-minute schedule. Just a conversation. If I can be of service to anyone either looking to get started or passively investing with us, please feel free to reach out.
Awesome. And if you are enjoying this content, don't forget to subscribe to the channel and to like our podcast. If you're listening on iTunes or any other source, make sure to give us a like. And I hope you have a wonderful night. Thank you, Alex, for being here today.
Thank you, Anette, for having me. Have a safe evening, everyone. Thank you.
This was Real Estate Deal Closers with Anette Talie, brought to you by Talie Investments. We hope that you enjoyed this episode. Our goal is to provide amazing value on your real estate journey. Connect online at www.talieinvestments.com, where you can find this episode and more. Did you like this episode? Subscribe, like, and share.